Mira Business FM.
My name's Tim Elliott. This is the Morning Drive, and in this half hour or so, perhaps longer, who knows what's going to happen, we're going to be talking gold. And I'm really pleased, actually, to be joined by a gentleman that I've not seen for a while. He's the CEO of Goldstrom Advisory, runs his own advisory consultancy business as well. Jeff Rhodes is with me. Nice to see you, Jeff.
Yeah, good morning. As you say, it's been a long time.
Do you know what? I was trying to work out when you were texting me earlier from the parking, and I thought it's over 10 years.
Yeah, we were at an event at the theme park. I guess Dubai Parks.
Dubai Parks and Resorts, so that is probably 10 years ago. Yeah.
And there was, another radio station was having an event.
That's right.
And, we met up there. I think it's the first time. I'd seen you in the studio at Dubai Eye a number of times
over the years, yeah. And then we kind of fell out of touch. Look, I apologise for not writing or not texting. That's the first thing I had to say.
I've missed you.
You always did say the right things. Look, it's great to have you here because of all the people. I was sitting thinking I really would like to talk about gold for a number of reasons. I think it's an important topic to talk about. Obviously, it's an asset class. Obviously, it's an investment class. And so much is happening at the moment. And I immediately thought of you. You are well known here in the UAE, in Dubai. I would contend probably well known internationally. You commentate on all matters gold, precious metals, and that really has been your career. But I wanted to ask you before we go any further, when did you get the bug? When were you bitten by the gold bug?
This is quite a story, even if I say so myself.
We've got time.
I'm an oik from the East End of London. Mm-hmm. Didn't actually take a degree because, as a family, I had to go to work. Right. So I got my A-levels, got enough to go to university, but then decided, we needed money. So I got a job, and the job was with a big company called Bowwater Corporation. It was one of the biggest companies in the UK. How I got the job, I don't know, but I did. And this is in 1971. Of course, a big year for here.
Yeah.
And so 1971, I was given this job, and it was to buy foreign exchange to pay for the imports of wood pulp into the UK from America, from Canada, and from Scandinavia. This is when we had fixed exchange rates, and we had strict controls on currency movements by the Bank of England. And so you had to apply to the Bank of England for permission to buy foreign exchange. And so that was my first job.
So first of all, that's an incredibly difficult time. It's hard to get your head around what you would have gone through then, looking at the way markets work now. But also, how does a self-described oik or a ruffian or I don't know what insert any word you want to here, from the East End of London, work his way into something like that? What charmed your way through the senses, if you like?
Frankly, I saw an ad.
Right.
I think it was in the Evening Standard back in those days.
The afternoon newspaper of London.
Afternoon newspaper.
Yeah.
Saw this ad, and I'd been doing kind of summer work while I waited to go to university. I was due to go off to Essex University in Colchester to do a degree in economics, and then I got a temporary job. It was only temporary for me. It was full-time for them. But it was with Bowwaters, and I loved it because it brought me into the world of foreign exchange. And what I used to do is to phone up 6 major banks, ask them for their exchange rates. I'm talking big numbers, like even 1971, $20 million, $30 million, so big tickets.
That is.
It was really a big ticket for then. And, I got the bug for foreign exchange. And so there used to be now we've got the internet, but there used to be distance learning modules you could take.
Yeah.
And I did a module to learn about foreign exchange, teach yourself foreign exchange. And so I took that, I got my diploma in that, and wrote to the 6 banks that I worked with on behalf of Bowwaters and asked them for a job. to be a foreign exchange dealer. And one of them was Samuel Montague, good blue-blooded merchant bank, one of the original members of the gold fixing in London from 1919. But they were impressed with the fact that I'd actually taken to write a letter to the head of personnel and asked for a job. So they gave me the interview, and they said, look, we like you. We probably, to join our management program, you need to have a degree, but what you've done in terms of your work is good enough for us. So why don't you join as a management trainee, see where it takes, and if you get the chance to become an FX trader. Yeah. So I joined in 1973, and Tim, by 1975, my first role was within the currency accounts department of Samuel Montague, right? I realised quickly that I knew more about foreign exchange than anyone in that department, and probably knew more about foreign exchange than the traders themselves. And so I was promoted to a full-on manager at the age of 25 in the bank, and forgot about my wanting to be an FX trader. I had a department of 50 staff. And I loved the job, and really I thought, this is it for me. Then I got to understand gold because I was tasked with looking at the possibility of funding the bank with gold. So, okay, and because you see, merchant banks, and members of the gold fixing, you could borrow gold from central banks very cheaply. I mean, really, 1% per annum.
I was going to ask the figure, 1% a year.
1% per annum, but very few people could do it. And not many central banks really wanted to lend. Some did, some didn't. The Bank of England supported the members of the bullion market in London, so they did. But I realised with this low level of gold interest rates, if you actually borrowed gold and then swap the gold into US dollars, because there was a swap market then, you could create synthetic dollars for about 6% per annum, and the prevailing LIBOR was 10. And so I wrote a paper for the financial director suggesting we should do just that. So he called me up and he sat me down and said, a bit like this, Tim. He said, so where did you get your knowledge of gold? I said, well, I haven't got any knowledge of gold. I know we can borrow at 1%, and I know interbank is 10%, and the swap is 5 or 6. So it seems like a good idea. And he said, he said, where have you been hiding yourself? and literally, as a result of that kind of interview, I was asked to join the gold desk at Samuel Montague. And Montague, as a member of the gold fixing, one of the biggest gold traders in the world, was a great job to have. And I joined them in February 1978, just before gold went on the rampage. It went from $250 in 1978 to January 1980, $850 was the all-time high at that time. Right. So imagine it's like gone up like 4 times. And I was involved in all of that, and the rest is history. I've been a gold trader or involved in the gold business for 50 years now. Do
you know this thing that I'm thinking while you're running through this, aside from getting my head around all the things you've done, and I guess when you talked to your boss in the very early days and explained what you were doing, that was probably revelatory in a lot of ways for him, and great for you. It's the same now as it was in so many ways, because if you look at what's been happening with gold at the moment, gold prices at record levels. What is it this year? 50% up in the year
50% up
so
this
far.
Year.
It must be as much of a thrill as it was in 75, 78.
Yeah, look, it's much more. It's much
huge
more
at the moment
because I understand it now. I didn't have a clue. Honestly, I didn't have a clue. And when I joined the bullion trading desk, I didn't even know how to pick up the phone and do a deal. Because, when you're on the trading desk, you have a handset that's a clicker. So,
Yeah.
buy, and then you often have two handsets, buy, sell.
Yeah.
And I didn't have a clue how to do that at all. Fortunately for me, the chief bullion dealer played soccer for the bank, for Sammy Montague, and so did I. And so he took me under his wing and said, look, don't worry, I'll teach you. I said, what do I really need to know? His name was Doug Ball, and Ball by name, Ball by nature.
Right.
I said, what do I really need to know? He said, you don't, just buy gold. I said, what do you mean just buy it? He said, well, just buy it, sit down and buy it. Start the day, and then through the day, sell it. Next day, come in and buy it again.
That's such great advice because, I've just spent an hour talking about financial fundamentals and planning and saying, when should you start doing this? What's the optimum time? And the answer is always. Now.
Always.
Yeah.
And that's what I tell people now. I do advise a kind of staged approach. And I do like the idea of accumulating gold over a period of time. When it's a birthday or a wedding or special occasion, that rather than buy different types of presents, almost take the Indian approach and buy gold. And so that's what I think. And the best way to buy gold, the cheapest way to buy gold often is, if you like, very simple jewelry. Chains and bangles, not a lot of making charge, not really. But something you can wear and is an heirloom and you can pass down through the family. So it's a lot of add-ons from having just simple jewelry.
It's interesting that because, you look at gold as a class, but actually gold is something you can enjoy. And obviously prevalent here in terms of, I don't know, when Diwali comes around, people buy gold and the price at the moment is fluctuating. There's a great deal of interest, but it's very much a thing you can wear, you can admire,
Exactly.
and if you pass it down to your kids or sell it at some point in the future.
No, absolutely right, Tim.
That's what it is.
And this is it's enduring quality.
Yeah.
The Indians have believed in gold for 2,000 years. And I think it's a true story or a truism story. There used to be lots of punch-ups between the various kings in India, and when the sort of violence started, the farmers would dig holes in their land and put the gold, bury the gold,
right.
and then run off. When things were quieting down, come back and get your gold again. And so this and it would never be touched. So,
even if that's an apocryphal tale, I like that.
it's a nice story, and it explains very clearly the benefits of gold. It's the one asset in the world that is no one else's liability. And what does that mean? US dollars, right? All you've got when you've got a US dollar is the promise that the US Treasury will honor that dollar.
Yeah.
Right? It's only a bit of paper. Whereas when you have and so your liability is the US government or any government when you've got paper money. When you've got gold is gold no matter what anyone says. There's no liability on the other side. You've got an asset, an enduring asset that you can't destroy, that people around the world believe in. More and more people are starting to become Asian, the West is starting to take on the same kind of approach as the East. And so where is all this buying coming from? It's actually from investors who are waking up to the fact that the gold is probably the one true asset that you can always depend on. And even if the price goes down, it's okay, because my advice to people always is to have a certain percentage in gold. Certain percentage.
Sure.
What is that? Between 10 and 20%. 10 is fine. If it's a bit like driving a car. I mean, I drive a really boring car. My insurance is quite low, around 4%, 5%.
Okay.
But if I was driving a Porsche along the Sheikh Zayed Road, it's quite dangerous. The insurance on that probably is 10%.
Sure.
So follow the same pattern, that when markets are calm, everything's good in the world, 5 to 10% is the right amount of gold. When it's as it is now, with President Trump in office, and you don't know from one day to the next what he's going to say, I don't think he knows. So I think that's the issue. And so that uncertainty makes it a dangerous market. So when you're in a dangerous market, you're in the Porsche driving up the Sheikh Zayed Road, you need to have more gold.
It is an uncertain time, or dangerous is another way of putting it, I suppose. But it's funny, talking to you yesterday, about coming on today, you said to me, and this is a direct quote, I think, Trump is good for gold.
Yes.
Yeah.
So the first time around, in his first edition, gold prices went up during his presidency by, it depends when you pick the star, about 80 to 90% increase in the value of gold. Why? Because you here inserted a degree of uncertainty into politics, into economics, that no one really knew what was going to be said next time. And so, if I remember the numbers correctly, Tim, it was from about $1,200 an ounce when he beat Clinton, and it got to around $2,100 an ounce during his tenure. So, it's not difficult, it's to do the math. It's huge. And so when all of this was transpiring with this current president and the election, I maintained that a win for Trump would be extremely bullish for gold. And believe this or not, I was asked, well, where could it go over the next 4 years? So I said, I don't know, 3,750. And this is when gold's 2,100. Right. And there was, oh, really? I said, yeah, look, I'm not saying it's going to go there. The question was, where could it go during this 4 years? And that was my number. I didn't expect it, Tim, within the first 2 years.
I'm really wary of saying to you, what's your prediction? But you've just done it yourself. Global prices around about $3,800.
That's where we are now.
At the moment.
At the moment. Yeah. Look, it's too much too soon, in my view.
Right.
I do understand why, because on top of anything else, the US government's now closed. It's closed.
It's a very good point. Yeah.
But do you know that this is about the 5th time that it's been closed over the last few years?
I know.
Yeah, I think it was the last time it was with Trump.
It was.
And it was about 30 days. It was a significant period, not 3 or 4 days. So who knows what's going to happen over the next month? And that's why we've had this spike to 3,800 plus.
Right.
But it's overbought, technically way overbought. There's one technical indicator that people could look at is called an RSI, relative strength indicator, and you can look at different periods. I like 30 days, and when you see that you've got your 100, the scale of 100, above 70, very, very overbought. Below 30, very, very oversold, and largely prices, all asset prices are within that band. Well, gold is around 75. And it's been around 75 for a week. So it's unsustainable. It can correct itself just by staying here for the next month, and then it will go away. But it's much more likely to lead to a significant reversal. So where's the first point on the charts? 3,600. Where is the main support?
You'll notice I'm not asking you for these predictions. I'm just following.
No, and yeah, look, you see, these are only my views.
Sure.
Okay, these are I don't give investment advice.
No.
I just answer questions. What do I think? Mm-hmm. And when I look at the charts, the key support is at 3,300. So I could see a price between now and the end of the year of 3,500, 3,400, but going into next year, we are looking almost certainly at dollar interest rates of 2% or lower. Mm-hmm. Trump, that's what Trump wants.
Yeah.
Okay. So what Donald wants, he gets, largely. I think he's going to get it. I think it's in January that we'll have a new Fed chairman. Mm-hmm. Certainly first quarter of next year, we've got a new Fed chairman. And that Fed chairman is going to be a political pick. And that is...
I'd say that's a safe assumption.
That's a safe assumption.
Yeah.
And so you're going to have a Federal Reserve that's meant to be independent that won't really be. That adds to the uncertainty and to, if you like, the power, political power that President Trump has. In an era when we've got 2% or lower interest rates, well, where do you go? Where are you going to put your money? What is the best perform? So now you're an asset manager.
Safe haven?
Okay, Tim, you're a top asset manager. What is the best performing asset class of this year or this decade or this millennium? It's gold.
It is, yeah.
It's gold. And so where should you put some of your money?
Yeah.
Some of it into gold.
Let me put something to you. I mean, I really do shy away from asking for predictions. And as you say, opinions, I think that I can use for the basis of, an argument or a discussion. Jeffrey Gundlach is a bond trader, a veteran bond trader. I'm sure you've heard of him. His opinion, often sought by the media. Last week, he forecast gold would reach $4,000 an ounce before the end of the year. He thinks 25% allocation isn't excessive, given where we are, underlying trends at the moment. Deutsche Bank agree with that. Deutsche Bank think it could rise above $4,000 by the end of the year. You're not quite as bullish as that.
No, look, it's a bit of a crowded space.
It is, yeah.
So, and everyone's long.
Right.
Like everyone who can be long is long.
Okay.
Right?
Okay.
Maybe not as many individuals, but what you should look at, and it's not so easy to get this information, and that is the relative swap value between gold and US dollars. Okay, and that's measured in percentage. So gold, except just for this argument, is a currency, because it is a currency.
Sure.
And as a currency, it has an interest rate. Okay, dollars obviously a currency with an interest rate. So at the moment, the dollar interest rate is round about 4%. 1 month about 4.25%. It's actually lower, I think. Yeah, about 4.25%. Gold interest rates out to 1 year are 0%. Right. Why? Because everyone is long gold, and you want to lend it, everyone's got it. So there's a zero interest rate because the market is long.
Yep.
There's the danger of actually coming in at any level and saying this is the level to buy, this is the level to sell. If you believe in gold, you should always buy if you are average into the market. And what's the timing? As I say, when it's a wedding anniversary, whether it's a birthday, a birth of a child, buy gold. And that is a really, really good way to do it. That way you naturally average in and forget it. Don't ever think about selling it, ever. Well, because if you are struggling, you can actually swap it for cash. You know, if you like, the days of the money lenders, if you like, the pawnbrokers, are now it's reputable that you can actually go in to some high street places.
I was going to say those days are kind of long gone.
They're long
really.
gone, but you can, if you got physical gold, you can monetize that.
Sure.
Right, and a lot of the work I do these days is actually in that space, in the monetizing of gold, so that if you've gold and you really need some cash, find a way of swapping that into cash, and it takes you back into gold a year later, 2 years later. You just do the swap, and you get your gold back.
Do you know what I've enjoyed about this morning is I'd forgotten how talking to you is not a technical nightmare. I'm not having to do hurdles in my mind because you make it so straightforward, so easy to understand.
You know something? That's such an insightful comment. You don't really know the importance of that. Bankers, because I ran a bank. I mean, I came here to set up Standard Bank London.
Right.
And now Standard Bank London, or Standard Bank in London, is now ICBC Standard Bank. It's probably the number 3 bullion bank in the world. But that business really started here in Dubai, in Emirates Towers.
Yeah.
So, but when you kind of look at this, and bankers don't really get gold because it's so simple. They're looking for the catch. Where is the catch? Where are we going to lose the money?
It's simpler than you think. Let me just stop you there. We'll come back and talk more. Jeff Rhodes is here, CEO of Goldstrom Advisory, talking gold. This is the Morning Drive. More gold, all the glitters, in a moment. Just a reminder, you can find us at mirabusiness.fm. That's the website. Everything streams there. And you can find all the interviews, all the content that we create there as well. Online at YouTube, streaming live on Twitch too, plus all the interviews appear there. We're on X for News, Facebook and LinkedIn and Instagram and Rumble, and there's a whole list which I'm trying to remember at the moment, but you know where to find us, Mira Business FM. Just search that out. My name's Tim Elliott. I'm talking to Jeff Rhodes, the CEO of Goldstrom Advisory. He's in the studio with me. Jeff, thanks for sticking around.
Yeah, it's great.
I appreciate it. It's nice to see you. We've been talking about your history in gold. We're talking about gold as it is at the moment. I want to come back to, can I ask you some potentially, simple, daft, easy questions?
No such thing.
Yeah,
Honestly, there's no such thing. Certainly not to me.
I love it when people say that because I'm a person unafraid to. I was the kid in the class who would be like, "Sir, I don't understand. Can you repeat that?" And I think teachers used to throw board rubbers at me when they used board rubbers.
Yeah.
It's whiteboards these days. I understand. A couple of things we were thinking about in the office yesterday, and I kind of know the answer, but why is it that gold is holds this position, and it's a lofty position as a class, as a store of value, over something precious like diamonds, for example?
Well, diamonds are relatively new in terms of the world, and if you go back and historically, Egypt, for example, Egypt was a major country on the global stage like thousands of years ago,
sure,
because it had a lot of gold and it was power. Gold look, either you get gold and believe in gold or you don't. There's no halfway house.
Right.
Okay, and gold is simply the store of value that has proven itself over thousands of years. Okay, just to bring it up to date a bit. So, in the 1930s, the Great Depression in the US, gold was fixed at $33 per ounce.
Right.
Okay, but there was a big problem because the US needed to inflate its way out of trouble, but didn't have enough gold at $35 an ounce to make it possible, and so they suspended what they called the price at 35, but said Americans couldn't own gold. So from the mid-1930s, did you know that Americans legally were not allowed to own gold? I only found this out recently.
I had no idea. In any shape or form.
Any shape or form.
Couldn't buy a gold ring.
Were not allowed, okay? Certainly in financial gold, not allowed. Right. And then there was we had the Second World War, unfortunately, and then there was the Bretton Woods Agreement in 1947, where all the major countries of the world agreed exchange rates between each other. So there was a system of fixed exchange rates. And if you wanted to change your exchange rate, you had to get the agreement and permission of your fellow major countries. So that was the case. And then in 1971, the Americans were a little bit upset that the Swiss banks, particularly, it's called the Swiss pool, they were buying and selling gold at a price of $100, $150, and they were allowed to go to the Fed and buy gold at $35 an ounce.
Oof.
So I think it was President Nixon said, we've had enough of this, and it coincided with the world realizing that if it needed to expand and grow, it needed proactive exchange rates that reflected the relative terms of trade between countries. And so 1971, President Nixon closed the gold window. No, you can't come and get gold off of the Fed at $35 an ounce anymore. And that was it. And simultaneously, they rescinded the fact, the law that Americans couldn't buy gold. So the Americans were then allowed to buy gold from that point. I think it might have been 72 when Americans were allowed to buy gold then. Then you had the evolution of the commodity exchange, futures exchanges simultaneously in Chicago and in New York. But the famous one was the commodity exchange in New York, which opened its doors in 1975. And the importance of that for me personally was the bank that I worked for, Samuel Montague, had a joint venture with Merrill Lynch, the biggest stockbroker in the world at that point. And so we set up that business in 1978. And in 1981, I was seconded to Samuel Montague in New York. And my job was to arbitrage local London physical gold with futures contracts on the COMEX. And I spent, my day buy, sell. And so America, in terms of involvement in the gold market, is relatively new. It really is.
It really is.
It really is. And where was gold traded? Really, London. Mm-hmm. London's the home of what they call local London, certainly London, Europe. And a lot of this, why London, just again, going back in history, in the 1850s and 1860s, simultaneously gold was found in America, South Africa, and Australia, in the New World.
Yeah.
Right. Now, it was found, but then had to be developed. The gold mining had to be developed. It needed money. And it raised that money in London with the merchant banks.
Right.
And one of those merchant banks was Samuel Montague. So in 1862. So that's it. And so America became important from 1975 onwards. And now the influence of the COMEX is really important. There are other major exchanges. I think, Chicago CME, Chicago Mercantile Exchange. There's the ICE, International Continental Exchange, and so on. But really, America, the US, is very, very important in terms of the world of gold.
Okay, and now, I mean, it's interesting now that you've kind of your whole career tracks with that, doesn't it? Really,
it does.
And you are now tracking yourself here in the UAE, along with the development of what is really the city of gold.
Yes. Look, it is the city of gold. The development, I think the monetization of gold on a kind of, not a retail basis, that's not the right word, but democratizing gold so that people, individuals and smaller companies and jewelers themselves own gold, but we're making it easier for people to own gold. Then once they've got that gold, use it. It's not a dormant asset. You could use that. For example, you can collectively take that gold, put it together, and lease the gold to somebody who needs gold. Who needs gold? Jewelers. Who's got gold? Now, a lot of individuals have got physical gold and would like a yield. They'd like it, but where do they get it from?
Yeah.
So one of the things I'm heavily involved in now is making that happen.
I feel like this is going to be a learning curve. I really do, and I'm hoping that we're going to get to a point where we can talk to you a couple of times a week, maybe at the beginning and the end of the week, so I can upgrade my knowledge as well. But I'm hoping for people listening or watching that we could track what goes on and also get some more history lessons as well. Here's another question from the office. We were talking yesterday because I was talking about you coming here.
Can I stop you there just a minute?
Go on.
Sorry to be so rude.
No.
But one of the things that Goldstrom Advisory does, it provides learning programs for people who are typically our clients, because one of our fiduciary responsibilities is to make sure that our clients understand what they're doing.
That's nice to hear.
Right, we do that. We do that proactively, but we actually provide kind of learning capability for individuals if necessary. We're very kind of democratic, but it's really important that anyone that gets involved in gold understands what they're getting involved in. And so sorry, carry on. Sorry to interrupt.
Fair enough. Well, we're just going to go straight to you for the learning experience, Jeff. The question was, we were sat talking, what do you want to know about gold? Why gold, not diamonds, was one thing that came up. And then, I forget how it was asked, but what nation stores the most gold at the moment? Could you even answer that? My first thought was China, but I don't know.
So what exactly is the question again?
Which nation stores the most gold? Gold available on this planet, I read yesterday, is about a bucket deep, the size of a soccer pitch or something. There's all those.
It is. It's around about 200,000 tons of gold that's ever been produced. But no, the question is, where is the most gold stored as a reserve? As a reserve.
Exactly.
The US.
It is still.
It is the US, and about with the increase in the gold price. Gold accounts for about 75% of official US reserves. 75%.
Okay.
Followed by the France, Germany, Italy, with roughly between 60 and 65% between them. So the major European countries, lots of gold, a big percentage. China, which is the biggest producer of gold in the world, produces, give or take, 400 tons of gold every year and doesn't export one of those ounces. Right. And it's also one of the biggest consumers of gold, importers of gold. So probably imports of 1,000 tons plus every year, retaining their production of between 350 and 400 tons every year. So actually, the gold that's retained within China clearly would make China the largest holder of gold. So, and it only has 4%, 3 to 4% of total reserves in China are held in gold. Now, the mean with central banks around the world is around about 20 to 25% is the average amount of gold reserves held as part of the gold and currency reserves. But when you say how much gold is in the country, the next closest is India.
Okay, which would follow?
And it's estimated that, so US reserves about 8,500 tons of bars, the big bars.
Yeah.
Okay. In India, it's estimated in the temples, privately held, around 25,000 tons. So I would say that India and China, between them, don't only have the most people in the world, they have the most gold in the world.
That's the answer. If you're listening out there in the office, there you go. That's what I guess. That's kind of what we thought. It's a huge amount of gold in China and India. So I'm trying to get a picture of how much that is in the football pitch terms that I used earlier. But I just can't do it.
No, Spurs is probably the best ground in the Premier League these days. Not that I'm a Spurs supporter, of course. But
no, I was going to ask that, but
it's massive, and it would be about right. All the gold in the world could be held at the Tottenham Hotspur Stadium.
Wow.
But I argue it holds a lot of the gold anyway because of its players. So.
I would argue that might not be the case. But
Are you a West Ham supporter?
I'm the other side of London. Yes, I am. My family are all from basically Newham, Canning Town, Silvertown, that area.
Yeah, when I grew up in Hoxton, in Shoreditch, that was the countryside to us.
Yeah, I'm from a long line of country bumpkins and yokels, Jeff. That's how it works. What else can we talk about today? What else do you think's important with where gold is now?
Yeah, I'd like to just early on in our kind of relationship focus also on silver, platinum, and palladium.
Okay.
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 I can't do diamonds. I don't get diamonds. You know, diamonds are for girls.
Okay. Okay.
It's a girly thing.
It's contentious,
No,
but,
listen, but
I
honestly,
understand the theory.
how many men do you know that has gone out and bought themselves or has bought a diamond ring? Not really. And as I understand it in the Sharia law, that the wearing of sort of diamonds by a man is not allowed. I'm not sure about that. But men don't really do diamonds. Men do gold and silver,
It's
particularly
true.
silver.
I guess if you're male and you're talking jewelry, very often it's the nice watch, isn't it? It's the dress watch. That's kind of how men do it. I know that's really broad strokes, and I hate to sound like an old, but then I am.
It's fair.
But it's reasonable to say that. Yeah.
That really is important, that we also spread our focus to the other three precious metals, because we can become too gold-centric. And silver, you know, was the original money.
Yes.
It wasn't gold, it was silver.
Yeah.
Right. And the value of silver versus gold is a popular investment tool. A lot of bullion traders and people, you know, investors, they like to trade the relative values of gold against silver. It's called the gold-silver ratio. It's something that I particularly like because silver is a much more useful precious metal. Not as useful as platinum and palladium that's used, you know, obviously in the auto sector and electronics and so on. But silver does have a lot of industrial applications, particularly medical. So silver...
And it's easy to work with.
Yeah,
as well,
and it's easy to work with, So, and also, not everyone's rich enough to own gold, but everyone can own silver. So I actually am a big fan of silver.
Well, what's the price of silver at the moment?
Silver at the moment, ooh, good question, $47 an ounce.
Okay, and compare that to gold, which is...
Yeah, the gold-silver ratio is around 80 to 1.
Okay.
Right? So during my career, I've seen that ratio as 10 to 1. What does that ratio mean? 1 ounce of gold could only buy 10 ounces of silver. But in the aftermath of COVID, when you know travel was banned and particularly transport of goods and services, that ratio went out to more than 100 to 1, right? More than 100 to 1. So 1 ounce of gold could buy 100 ounces of silver. Okay, so that's that ratio. The average over a long period, so over 100 years, would be around about 60 to 65 to 1. So 1 ounce of gold buying 65 ounces of silver.
Okay.
So, and a lot of people play this trade, and you know, one of the things we focus on weekly is that relative value. But we also like platinum and palladium. Palladium is the most illiquid of the four, so I wouldn't recommend palladium at all for the man in the street. Probably similar to platinum, but platinum, now if you talk about platinum and diamonds, much more like it, because platinum is known to be much more, the color of platinum, much more compatible and much more beauty enhancing than gold. So you look at platinum diamond ring, you know, wedding, engagement.
That's you know, that if you're wearing a platinum ring with a diamond on there, if that's your engagement ring, that's a symbol of...
No, that's exactly right,
really
Tim.
is.
But you know, the platinum price is about half of gold at the moment. Half of gold. Platinum price is at the moment around about 1,900. It's just, let's say 1,800. Gold is 3,600, just double it is.
I should not be as surprised as I am. I had no idea.
Yeah, not a lot of
that
people do
different.
because it's not really spoken about. So what I'd like to do, certainly in our discussions, definitely include silver. Definitely. And occasionally platinum, palladium when there's something interesting going on there.
Let me ask you this just quickly. We've got 4 minutes or so, 5 minutes until the hour, but just in terms of how the different precious metals are used: gold, silver, palladium, platinum. Aside from the obvious, the jewelry as a a reserve for a central bank, but how are these precious metals applied in medical services, for example, or electronics?
Yeah, I think electronics is easier for me to answer. And by the way, central banks are very, very, they will only have large bars. The 12.5 kilo bars?
Yep.
Only large bars.
Okay.
So the jewelry sector is another sector. There's a market in investment bars and coins.
Yes.
Smaller. But gold, in terms of medical, not really. But silver, I do believe, is heavily used in medical. Is always been a basis for photography, and is still a basis for X-rays and so on.
Right.
And is being used in solar. So it's a lot of practical uses for silver. Also, it's being used significantly in electric cars.
Okay.
So although everyone thought, okay, the electric cars are coming along, no need for platinum, palladium, or silver. Yes, there is, because
in terms of
electric
battery
cars,
technology, for example, it's huge.
It's huge. So and in solar and so on. So they're very, very. All four are very different. I think the main thing is gold is a currency, and it's a reserve asset.
Right.
Silver is a kind of currency, right? It is the poor man's gold.
Okay.
So what Indians will do, if they don't have enough money to buy gold, they will buy silver as a store of value.
And that's a traditional kind of cultural
Correct.
belief, isn't it? A value.
Yeah, and you'll never change that.
No,
You'll never change that. And so for me, and I always had an affinity for silver. Now, I'm going to find out the year this happened, Tim, but the LBMA they do run a competition inviting so-called experts to give their prediction at the start of the year, high, low, and average price of gold, silver, platinum, palladium, okay?
Right.
I used to do, when I was in London, I used to participate in this. It was good marketing. So 1 year, so silver, can you imagine? Silver is priced like 47.50 at the moment, like 2 decimals. Right? 1 year, I got the average price of silver exactly to the cent. Like to the cent. It was like, and everyone was saying, how did you do it? I said, well, I don't know. It's just a guess. But truly, I got a nice little gold bar.
What was your formula? I don't know. Plucked it out of the air.
Yeah, it was. No, I had a feel for it. I had a feel for it. I did definitely have a feel for silver. And I don't know why.
Educated guess. A love for the metal. I don't know.
I do definitely have an inherent sense for gold and silver, not platinum and palladium, but I do have that inherent sense. I can feel it. Look, I get up first thing in the morning, I look at the gold silver price. I do.
Yeah.
Last thing at night, I look at the gold and silver price. Often, if you get up during the night, I'll look at the gold and silver price. So I kind of live it. And this is every day. I don't have a holiday from this. There's no holiday.
This is just your existence.
This is me.
See, my thing is get up in the morning, stumble to the coffee machine, and yours is the gold or the silver price. Look, we are pretty much out of time, but Jeff, I'm really looking forward to this, to you coming in regularly, regaling us with information, history, and hopefully up-to-date knowledge as well. We'll look at gold, silver, we'll consider palladium, we'll consider platinum going forward. And if there's anything happening diamond-wise, we'll think about that as well, I guess. But Jeff Rhodes is the CEO of Goldstrom Advisory. I really love talking to you. Thank you for coming in.
I've enjoyed it as well. This format is so easy.
It's good to have a round-robin conversation. We'll be talking to you soon.
It's a fireside chat. No fire, but it's a chat.
I will work on the fire for you. Well, you can project it on the screens now, can't you? So it'll feel like the festive season. Jeff, lovely to see you.
Lovely.
Thank you.
Thank you.
Appreciate it. This is Mira Business FM. I'm Tim Elliott. We will later on be talking to the man behind a new awards ceremony that's going to be coming here to Dubai. Prem Patel's going to join us on the line from London. All will be revealed. Don't forget, find us at mirabusiness.fm. You can also find us on YouTube. We are streaming on Twitch. We're on Rumble. We're on Facebook. We're just look Mira Business FM up. It is that simple. This is The Morning Drive.
Mira Business FM.